Weiss+Associates presents The Federal Income Tax, How a Scheme Was Born. First of all, Weiss+Associates is not anti-government, nor do we state that the federal income tax is unconstitutional. The tax is lawful, but only in one jurisdiction. That jurisdiction is the federal statutory United States, which consists of the District of Columbia and the various U.S. territories like Puerto Rico and Guam, to name a few. Congress calls these territories states of the United States. U.S. taxpayers are those people who work for the national government in some type of public office, those who are born on one of the U.S. territories, those who are statutory U.S. citizens, those who are U.S. resident aliens, and those who are U.S. persons. In 1894, the U.S. Congress passed a bill to tax all American nationals regardless of their jurisdiction. A year later, in 1895, the case was filed with the U.S. Supreme Court, which evolved into the Pollock v. Farmers Loan and Trust case. The Supreme Court stated that there was only one kind of tax to describe the federal income tax, which it stated was a direct tax. Since this kind of tax is a one-time tax and only upon state legislatures, it carried the requirement for the government to adhere to the rule of apportionment, as stated in the U.S. Constitution at Article 1, Sections 2 and 9, or else such an act would be rendered as unconstitutional. Then, President William H. Taft had to acknowledge that the national government was deprived of any power to levy a federal income tax within the constitutional republic, and consequently on American nationals who were born in this jurisdiction. He realized that the best the government could do was to use the 16th Amendment against the national government and upon those who it determined were U.S. taxpayers under the federal statutory United States jurisdiction. The government had no option to misapply the federal income tax toward American nationals within the constitutional republic. Read the admissions of President Taft in the legislative intent of the 16th Amendment. There is a document located in the Resource Center of our website, Weiss+Paris.com, that contains this enlightening admission, as well as his recommendation to Congress to get the bill passed. When we read the actual wording of the 16th Amendment, we find the complete omission of the rule of apportionment based on the census and enumeration. This conforms with the limitations placed against such an act of Congress to challenge the Supreme Court's Pollock decision. The jurisdiction of the 16th Amendment only applies within the federal statutory United States and not within the constitutional republic. Keep in mind when reading that the national government has no power to override a Supreme Court decision and must conform to the court's decision. It may appear at first glance that the U.S. Congress did have such power, but from the U.S. Constitution, we must understand that there are two separate jurisdictions where the laws of Congress may or may not apply. The federal income tax does not apply within the constitutional republic. The Congress got away with this process due to directing it toward their own limited territorial jurisdiction, which again is the federal statutory United States. Next, the federal government needed to increase a steady flow of money from the millions of American nationals to fund its operations. The U.S. Congress devised the regulation 26 CFR Section 1.871-1A to accomplish just that. For purposes of the income tax, alien individuals are divided generally into two classes, namely resident aliens and non-resident aliens. Resident alien individuals are, in general, taxable the same as citizens of the United States. That is, a resident alien is taxable on income derived from all sources, including sources without the United States. Non-resident alien individuals are taxable only on certain income from sources within the United States and on the income described in Section 864C4 from sources without the United States, which is effectively connected for the taxable year with the conduct of a trade or business in the United States. However, non-resident alien individuals may elect under Section 6013G or H to be treated as U.S. residents for purposes of determining their income tax liability under Chapters 1 and 24 of the Code. It's important to keep in mind that in each reference, the United States means the District of Columbia and the territories. And a trade or business is defined at IRC Section 7701A26 to mean the performance of the functions of a public office. Being crystal clear on these definitions helps you see how Congress stayed within the framework laid out by the Supreme Court regarding income taxation while devising their scheme. The trap was set against American nationals. Via government propaganda and the misuse of words that everyday Americans use, they were duped into believing that they somehow were liable for the federal income tax and filed their first Form 1040, which the IRS refers to as making a voluntary election. There certainly was no full disclosure by the IRS or the national government warning American nationals that they were about to be converted out of their true status and be reclassified as U.S. resident aliens so that the tax could legally be enforced once the Form 1040 was received. This is the reference to may elect in the regulation. American nationals never had to file, and again, there was no full disclosure by the government or IRS to let them know this fact or the ramifications that a huge amount of their annual income would be taken from them each year for a tax never owed the national government. Without full disclosure, there was no willful and knowing intent on the part of any American national to succumb, but the deception was skillfully set. What confuses many American nationals to this date is the use of the expression non-resident alien individual. You'll find the definition in IRC section 7701B1B, where you find stated, "An individual is a non-resident alien if such individual is neither a citizen of the United States nor a resident of the United States." So, we see immediately if one was not born in a federal U.S. territory, he or she could never be classified as a statutory U.S. citizen. Then, those who are U.S. resident aliens from a foreign jurisdiction need a green card to work in the constitutional republic. So, non-resident aliens are not those born in a U.S. territory or are citizens of a foreign country. Putting all this together, we see that the expression non-resident alien individual means only one group, American nationals born in the now 50 states. Once ensnared, American nationals have never been able to find their way out of the mess until Weiss+Associates developed an understanding of the IRC sections 6013G, 6013G4A, and 6013G6 to permanently leave the U.S. tax club with the blessing of the U.S. Congress so as to not violate the 13th Amendment, which abolished slavery and involuntary indentured financial servitude. The IRS claim to may elect was bogus and an outright fraud against the American people for all the reasons stated above. To facilitate the departure from this quagmire, the only method was to utilize the revocation of election so that it was permanent and fully compliant with the IRS code that Congress created. Weiss+Associates developed the full document to accomplish this long-lasting outcome, again, with the blessing of Congress. The revocation of election allows each American national to reclaim their rightful status and to keep all their hard-earned income without paying for a tax they were never actually imposed with in the first place. Review our videos and especially the one on the revocation of election. The link to that video is located in the show notes below. We have an extensive video library created for the education of all American nationals who wish to maximize their individual freedom. Our website is weissparis.com. Questions and comments can be emailed to bilateral@gmx.com. Please smash the like button if you found this video informative and subscribe to our channel. Thanks for watching.